Well, the rally in US shares continued overnight, and for the sixth session in a row, we've seen US indices finish in the green. And that strength appears to be in response to the receding threat of trade sanctions. Now, that is a curious response. And in fact, the gains that we saw yesterday were barely held onto and were very narrow. And they were led higher by major tech results. Microsoft and Meta had reported before market, and both stocks performed exceedingly well in trading overnight. And it was the strength in the tech sector, and particularly software stocks, that finished the markets higher. And looking across the market, in fact, the majority of sectors finished in the red. So it was a very narrow rally, but nonetheless, it's delivered the sixth day of gains in a row, and that will be the positive momentum to take US markets into the end of the week tonight. And just to give you some idea of how it played out last night, here's the chart of Microsoft, and you can see I've circled last night's trading. This is a daily chart, so each one of those candles represents 1 day's trading. And after releasing its result pre-market, you can see that Microsoft shares rocketed higher, and they just disconnected with the previous closing price to record gains that at one stage were up more than 12%. So a very strong day for Microsoft, and that strength was repeated across the tech sector, and is the main reason why the market's finished in the green. Now, the concerns are that the market has ignored a number of very important issues, and the data that we saw last night confirmed what we'd seen over the previous 48 hours in both China and the US, with clear evidence of a slowing, particularly focused on manufacturing and industrial activity. And so those macro numbers are very concerning, given that most of them only just catch the tail at the beginning of tariffs, and that there's expectation that the next read on PMIs and the next read on US GDP are going to show further weakness in those sectors. So real concerns there. We've got a lot to look at on the ASX today, and one of the factors that we're looking at is the fact that US traders did not sort of take a hand in the overnight action in Australian and Japanese futures. Both Japanese and Australian futures finished in the red for the overnight session, suggesting that local investors could shrug off the gains seen overnight and push local shares into the red in trading today. We are expecting a thin trading session. We've got many markets still away or only skeleton staff because of the May Day holidays. So there could be fairly thin trading conditions across the region and here in Australia today. But that might work well for the Australian market because, of course, we've got the election result tomorrow. And to show you how we're looking heading into this, I think it's important to see the chart of the market, and I'll bring that up here. You can see that the Australian share market, as at the opening this morning, is at a crucial point. Having climbed back from those tariff-inspired lows, it's now breached that level at 80.60. And you can see on the chart why 80.60 was such an important level. In the middle of the chart, for the first time ever, the Australian share market there in the middle of last year approached that level and fell away a number of times before finally breaking through. And once it broke through the 80.60 level, we saw that level act as support on a number of occasions over the second half of last year. So when the market fell through that level, it introduced the idea of a potential significant downside move, and that's exactly what we saw as tariffs were introduced, and that downside move was exacerbated. But we've now climbed right back. Now, I draw your attention to the bottom of the chart there. That is the historical volatility of the index. As you can see, not only did it spike, it's remained elevated. And that's flashing a warning signal to investors everywhere. And that warning signal is that volatility is higher and is likely to see large moves. Now, combined with the fact that we've seen the market recover to above that key support resistance level at 80.60, that high volatility is telling us there's a large move coming. And combining that with the event that we have tomorrow, that is the election, it's suggesting there's going to be a major reaction to tomorrow's election results. So Monday is a time when every investor needs to be paying attention. Investors who haven't adjusted their portfolios for a potential major move today on Monday could be looking at action today. But nonetheless, the chart's quite clearly suggesting a big move is coming. And with the market at the moment above that 80.60, and if it closes above that level, the suggestion will be that it's a positive move, that there's a potential melt up coming in the Australian share market.